Good evening and namaskar. We'll now see a company called Raymond Ltd. It's a famous company. It was incorporated in 1925 and it is now a diversified group with interest in textiles, apparel sectors and also presence in real estate, FMCG, engineering, uh, so many other fields it is entering into slowly, and it is present in national and international markets both. 55 plus countries including USA, Europe, Japan and Middle East. It has a huge retail network of 1638 stores, of which 1589 stores are in 600 towns and cities in India, balance in overseas. One of the largest vertically and horizontally integrated manufacturer of worsted suiting fabric in the world. Famous. Raymond Suiting is very famous. The present MD is Gautam Singhania. The earlier founder MD was Vijayamohan Singhania. I am not going into some problems between the two. The Raymond Limited has 4 power brands. Raymond Ready to Wear, Park Avenue, Color Plus and Parks. So major business segments are lifestyle and engineering. Lifestyle includes suiting, garments, apparel, denim and shirting. Engineering includes tools and hardware and automotive components. India contributes 84% of the revenue, while balance 16% is contributed by exports. So branded textiles are about 43%, and that is a flagship business for the company in the Indian market, and as a business to customer branded player for suiting, and it's famous, we know that. In FY20, volumes were impacted in the wholesale channel, but the Raymond store channel witnessed growth driven by channel expansion and higher sales of combo packs. They have now 20,000 plus points of sale across 600 plus cities. Branded apparels constitutes 24% of its revenue. It has got, as I already told, Color Plus, Parks, Park Avenue, etc. These are famous brands. The branded segment was slightly affected and now it has come back. It has launched Ethnics as a brand in 2019. The sales from ethnic segment is growing very well. Now garmenting. So we have seen the branded segment. Now garmenting. 12% of FY20 revenue was there. Revenue from this segment comes from PPE sales in the bulk textile business and from customers in the US and Europe. High value cotton shirting in this segment. This is preferred in US, etc. The sales growth is significant. Then the other additions are small. Tools and auto components business, 9% of the revenue. And it has a joint venture, Raymond Yuko Denim, a joint venture with Yuko NV of Europe. So it manufactures specialty ring denim in India. So FMCG also is there. Some consumer segments are there. joint ventures are there. JK Helen Curtis Limited, JK Ansel Private Limited. These are all joint ventures. They have launched some personal hygiene products as well as skin-friendly hand sanitizers. Raymond also has got into reality. So that also is going on slowly. Now, if you look at the market share is over 60% in the worsted suiting fabric space. Probably the largest OTC branded fabric player. The company is trying to cut its costs as much as possible so that it generates more and more profits. The company has raised 350 crores by way of preferential allotment before year for reducing the long-term debt of the company. Raymond Ltd has announced a demerger of its core lifestyle business to be listed separately as a separate entity with the existing business of branded textile, branded apparel and garments. The demerger is under process. As far as the results are concerned, the results are reasonably good for the latest quarter. Earlier also it was good. June quarter also it was good. Let us take a look at these results. Net sales are 2,168 crores in Q2, 1,728 crores in Q1. It was more in Q4 of last year and Q3 of last year. But Q2 is sparkling, no doubt. Q2 of this year is sparkling compared to previous quarter and also compared to last year's Q2. Last year Q2 1,551 crores and year on year growth is 39.8% and quarter on quarter growth is 25.47%. Now, if we look at the net profit is 156.22 crores in Q2 compared to just 80.69 crores in Q1 and 57.3 crores only in Q2 of last year, which means the net profit has risen wonderfully by 173% year on year and by 93.61% quarter on quarter. Equity stands at 66.57 crores. Basic EPS also has grown by similar percentage. 23.86 rupees is the present EPS. So if you look at the strengths of this company, the company has passed the majority of the CanSlim investment criteria, which shows that its fundamentals are very, very strong. Company has very high trailing 12 months EPS growth, strong annual EPS growth also. Latest quarter, very good quarter, sales and profits both, we have seen that. Profits and profit margins are both very good in Q2. Company has reduced debt. Company has decreased its promoters pledging also. FIIs are increasing their shareholding. It is now near 52-week high. Price is having good momentum. Cash flows are coming down. For one reason is the debt reduction, etc. Now it has come from negative to positive growth in sales and profits with strong price momentum also. Recovery in price is very impressive. Now money control and other, they give it a reasonably good pass mark. It is a strong performer, whether operationally or financially. Volumes are good, trading volumes are good, 2,42,000. So buying and selling, there is no problem. Then it had gone up to 1,363 52-week high, and 52-week low is for just 576. Whoever had purchased at 576 would have reaped very good profits. EPS is good. Price earning ratio is moderate, 14.64, something like that. Price to book is also 3.63 only. Face value is 10 rupees. Market cap is 8,831. Overall, it is good. So the current price is just 2.68% away from 52-week high. Momentum is good. It is an outperformer comparing to Nifty. Having some large deals also. Piotrowski score is good, indicating strong financials. Of course, 3-year CAGR growth revenue is not that great. Industry comparison results in reasonably high placed in the industry. Shareholding pattern, if you see that, it still has a pledge of 25.78% after reduction of 6.06% during the last quarter. Promoters have decreased their holding slightly for 49.16% to 49.15%. Mutual funds same as earlier, 2.41. Price performance in the last 1 year, 101.6% growth, borderline multi-bagger. Will it be like that in the current seasons, coming quarters, etc.? We will have to wait and see. It has got sound management, though I have to point out the rift between the father and the son. That I am not going to deal with. So, but Raymond Ltd is a good company. It is progressing well. It has got good expansions, and joint ventures are there, and joint ventures will progress very well. Raymond is a reputed company. Its sales are very good, and almost everybody prefers Raymond clothing, Raymond suiting, etc. Thank you for listening. I will be back with you with another good company. Again, I tell you, you would have noticed, I always select, almost always, not always, but almost always, wherever the profits are more than 100% year-on-year growth, that only I will select, generally speaking. One or two exceptions will be there. Very good companies are there with less than that. That also I might select. But we will have to look at the other parameters which I am giving here. Okay? Please listen twice or thrice before you put your money in. Second, please tell your friends also to subscribe. See, I have not seen any channel giving so many best performers. Okay, every channel has its specialities. I don't deny that. Now, please wait for my next offering to you. Thank you.